welcome. Welcome to our continuation of events in cooperation with Backbase and Mambu. We are really looking forward to have this session today. Due to the ongoing COVID-19 pandemic, unfortunately, we have moved the event on this virtual platform. We hope that this works for all of you fine. And the good thing is, next to avoiding travels and keeping social distances, we are also glad that this event today is organized in cooperation with all European Capco offices, so namely Austria, Belgium, France, Poland, UK, Slovakia, and not to forget also Switzerland. Based on our registration from even beyond Europe, so from all over the world, it seems we have found again a interesting topic for you. So we are looking forward also to a hopefully lively discussion afterwards. Yes, in our first session, we were presenting our idea of how to build a digital bank from scratch. And following the discussions and also the feedback we have received afterwards, we will today present you an approach of how to upgrade to a state-of-the-art banking platform. So it's a kind of a different twist today. But perhaps let me first introduce you the today's representatives we have from Backbase and Mambu. And as we are definitely international, Frank, based in Amsterdam, would you just give it a start?
Yeah, so thank you, Oliver. I'm looking forward to hold this webinar again together with you guys. So my name is Frank. I joined 11 years ago at Backbase, and today I'm responsible for Northwest Europe.
Okay, thank you, Frank. And yeah, being truly global, from Mambu today, we have Alexei speaking out of Miami.
Pleasure to be here. So hello, everyone. My name is Alexei, and I'm leading the global solution engineering team at Mambu for the last 3 years. And before that, I was actually part of the Backbase, working together with Frank and doing a lot of digital transformations, building a lot of new neobanks right now. So my pleasure today to share that experiences with you.
Thank you. And yeah, my name is Oliver Geisler. I'm partner at Capco in the office in Frankfurt. I'm responsible for our digital financial services competency in the countries Germany, Austria, and Slovakia. But perhaps if we're gonna have a look on our agenda, I hope this works now. So we did the welcome and introductions already. Overall, we have planned 2 hours for the session today. So we keep it, the intro we kept short. I will give you some intro into the overall topic and into the what kind of migration approach for the upgrade as mentioned. And then Frank and Alexei will explain you and show you how this would look like with Backbase and Mambu. For your questions or remarks, we have here in the webinar tool the question function, so please use it. We have overall a Q&A session planned at the end. Nevertheless, I will keep an eye on all your questions and will try to get them placed wherever I find that it's possible to step in here, so that we already have a lively discussion whenever you have certain questions. Just please use this question feature. And as said, just from the planning, we should have enough time for all the questions, even though afterwards, so that we can keep it in the 2 hours as planned. But let's see how it works. Yeah, talking about some information regarding this current situation in the banking industry. We have focused it here a little bit on Europe, as I said, that this event is organized in cooperation with all our European offices. If we look on and compare the cost-income ratios of the banking industry in Europe, and we compare it with North America and Asia here, you can see that especially in the past 3 years, we have a significant increase in the cost-income ratio here in Europe. So you see that definitely we have a cost topic. And we must also confess that overall, within the European banks, that they are not profitable enough. So if we look, for example, in the DBS, that was too fast, in Singapore, they just recently published a comparison of the cost-income ratios for what they call traditional clients and the digital clients. And I think it's a very interesting piece, seeing that there are 20% points difference in the cost-income ratio of these different clients. So if we say that we have definitely a profitability issue, you can see that digitization is definitely a part of the answer to solve this. Now, what does it mean? And if we now look also, there have been a survey just recently about the top banking priorities post-pandemic and into 2021, and you can see that 75% of the banks has answered that digital banking transformation is one of these priorities. And if we look into more details, we see even that almost 50% of this, so almost a half, says that transform the legacy core system is important post-pandemic. So we see that this is definitely a relevant topic, and I think we can see it also from your registrations and your participation that you agree to this. Now, the question is always, what is the right approach? And I think people like me in the past, we always have said in a core banking transformation, it needs to be the big bang approach, as we have so many dependencies, we need to have the data. But on the other hand, if we look on certain examples in the past, it's not that easy, because core banking transformation, it's like an open heart surgery. The whole bank business is based on this platform. So it's not that easy, and it's a pretty complex endeavor you have to accomplish. So, and if we look also on certain examples, just here in Germany, I think the most common one is the APO Bank, where they have had certain issues by doing the core banking transformation. But we can even look also into other countries, be it here as an example, the TSB Bank in the UK, or the UK's cooperative bank, and also looking, for example, to Australia. There have been different articles found easily of failed transformation, so core banking transformation. So we see that it's not always a success doing it. So it's always also the question how to do it. And our proposal here is going a little bit in a different approach, doing it probably stepwise. But stepwise, how would this look like? How would it work? So today we usually have a core banking platform here, which has certain integration with the group functions, so group finance, group risk reporting, and so on and so forth. And of course, we have these shared functions, and you have your front layers or the channels, online, mobile, phone, as well as the employees being more or less in separate applications connected to it. Now, doing this stepwise, and this is it does not necessarily be the only approach which works, but it's a way we see which is definitely risk mitigating. And it's cost efficient. It does not necessarily always be the cheapest, but if you do it right and if you do it clever, I think it could be even a cheaper version than the classic big bang core banking transformation. So the first step would be, in this approach, to consolidate the front channels on one single platform, so that it's even though you have different channel, but it's still the same platform where you connect your core banking application to directly. So of course, sometimes you have certain layers in between, but it's important that it's connected. Then you start implementing a new core banking application, core banking system on a greenfield. Just risk-free, you just install it, you start setting it up in the way you would like to use it in the future. As a third step, you would connect the two core banking systems you have in place and synchronize them, so that you make sure that the core data, the client data, also certain transactions informations are synchronized, and to ensure that all the necessary reports, the regulatory requirements are fulfilled based on two platforms, on both of the platforms. You can do it either via directly routing it through the existing core system, or even doing it certainly directly. That's whatever makes best. So the important here is that the core banking system, the new one you have selected to do so, needs to be flexible to establish such synchronization and interfaces. That is the important piece. Otherwise, you would have a lot of issue ensuring this synchronization or connection. So that's also one relevant consideration to be taken. And then you can start implementing product by product from the front channels to the core banking, to the new core banking. And here you see the importance, why it was so relevant to have a consolidated front channel platform. Otherwise, you would need now to interface all the different products you have to each and every single channel system. And as you have it now on one platform, you can reuse this and does not have to do it all the time and again, and it's more efficient in that regard. And then you can easily migrate product by product or service by service from the old system to the new, or you can even implement new products, new services, new digital offerings your existing platform was not capable to deliver via the new platform. And then you can kind of dry out the old system so that you have taken over step by step. And once you have done all of them, you just can retire the wrong direction. You can retire the old core banking platform and just have everything on the new one. So this approach does not necessarily be taking longer than a big bang approach. Instead, you would even have the benefits of the new platform even earlier, because you can start directly implementing product by product and do not lose that much time. Often we have situations that such a core banking transformation takes long time based on the complexity of products or services, and you have this big bang approach which needs to be tested. And here you can be much faster and therefore also more cost efficient. So that was pretty fast. I hope that it was clear to everybody. Nevertheless, so the question now, how would it look like? And as we have with us Backbase and Mambu, I think there's of course a reason why we have them here. Looking forward, Frank, to explain how this would look like then with Backbase.
Yeah, thank you, Oliver. Let me move to the next section. And before we jump into the topics, let's first talk about what is actually going on in the financial service industry. Because as an industry, we've all been talking about it for several years now. We have talking about platforms, APIs, open banking, PSD2, blockchain, cryptocurrency, fintechs, of course, cost-income ratios that are not under control. Regulators being more open for new entrants, the whole PSD2 regulation, and also new banks popping up. But we also see now the first new banks closing down or completely changing their business model. So what I see is that the financial service industry is in the middle of a massive disruption. And we call this in Backbase, we came up with a nice word for that. We call that the neo-reality. And banks need to cope with this new reality. That's the battleground, and they need to be ready for it to stay relevant. And of course, unfortunately, with COVID-19, it became even more apparent. Branches became less important, digital even more. And that also is really showing which bank is really prepared for change and which are not. And obviously, core banking systems and legacy core banking systems are a critical part in, let's say, the ability for banks to be able to change. For me, I think there are three major topics that banks really need to master in order to be competitive in this new reality. And you already shared it as well, Oliver. Also in your survey, it came out customer experience and customer engagement is key. And that's the one that you see here at the top. I believe that in everything that a bank does, the user should be the number one. And you always look at the intentions, the preference, the needs of the user, and that should be the starting point in anything that you do. The second thing, and that is also what you see what, for example, companies like Netflix, Spotify, Uber, and so forth are doing, is they're continuously innovating. They're continuously, with small increments, improving, let's say, the service that they provide. And with small increments based on user feedback, they are basically increasing the experience that the clients have with their bank. And they are more engaged with their clients or with their advisors, or take, for example, Uber with their drivers. But in order to do so, in order to be human-centric, in order to be able to continuously innovate, you of course need a platform in place that allows you to do so. And there we come, especially with the traditional banks, and we do a lot of business with traditional banks and try to make them more digital and really to allow them to be competitive in this new reality. But they have a lot of challenges, and one of these challenges is they are basically lacking the freedom to innovate because they are dependent on a core system where basically the front and the back is all in one. So first of all, sometimes we even see that they're completely outsourced and they're completely dependent on a core banking provider. So they have a heavy lock-in. Sometimes that core banking provider is also offering it as a service to multiple banks. So it's also a one-size-fits-all. Sometimes we also see that core banking providers are not always digital first. They came from the core and basically build a screen on top, and it's not, let's say, the digital DNA is not really in their heart, not in the core of their business. And that, in the end of the day, is basically limiting a lot of banks in Europe, but also abroad, outside of Europe, in, let's say, hindering them from being competitive in this new reality. So I think a couple of things need to happen there, is because you need to move. All these banks, they are aware, they know they have to move, but they're locked in. So there are a couple of ways how you can do that. And let's talk about that. So where they want to move to is what you see here on the right side of the screen. They would like to have the freedom to innovate and also the freedom to differentiate. So therefore to differentiate by leveraging their legacy, by leveraging next-gen cores, by leveraging fintechs, leveraging non-banking, and basically leveraging this web service enabled ecosystem of all kinds of innovation that they would like to leverage. But they have a challenge with that, and that is typically what we see always sits, let's say, with a legacy core. I think the first thing that needs to happen, let's say, to start, is that that on C-level, the management team needs to be aware that digital is not just a side project. And we still see a lot of banks where digital is actually done on the side. But in order really and perhaps I'm exaggerating here, but in order to really to survive in this new reality, digital should be at the heart of the business of any bank. And I think it starts with this mindset. And luckily, we see a lot of banks that perhaps have not been the most digital ones, but that mindset is really, really changing, and they take the problem and really try to solve that, let's say top down, and push the organization forward, and to basically also not only digitize the IT architecture, but also digitize the bank, and also building up capabilities to do so. And then you also move into, let's say, awareness. The awareness that, let's say, this traditional banking model, where you have, let's say, the brick and mortar, where you have the branches, will simply not survive. And I think with COVID-19, this slide, we have this slide already for a few years, but this slide is still so relevant today. And with COVID-19, the branches have become less important. Digital has become more important. And digital sales and self-service is key. And then the question is your core vendor able to keep up with that pace? Is your core vendor able to keep up with, let's say, that required innovation that is that basically your customers expect? So what we believe is that most likely that traditional banking model will not survive. It cannot act as a foundation to compete in this new reality. You have lots of silos, which is very costly, lots of legacy applications, lots of duplications, and there's also no customer 360. And therefore, it's also very expensive. So what we really believe in is what we call platform banking or engagement banking, where a bank is able to orchestrate, has the ability to orchestrate all kinds of value and present that to the right user at the right moment, at the right device, at the right moment in time. Another challenge that we see is that a lot of banks are siloed. They have a separate IT stack for the branches, a separate IT stack for internet, separate IT stack for mobile. And that will, of course, never allow you to create seamless omni-channel experiences where a client starts on channel A and moves to channel B and then is being assisted in channel C. So also that is, I think, also a mindset change that a lot of banks need to take into account in order to really be competitive in this new reality. Okay, so we see a lot of challenges. Let's also talk about, let's say, how do we do this? Because we've done this now, I think, for at least dozens of banks. So let's look at a few examples. I'll also share two case studies with you. So I think the first concept is what we call the decoupled architecture, or the two-speed architecture, or a loosely coupled architecture. And typically you see that, especially with core banking systems, is that the presentation logic is interwoven into the business logic. So what we also typically see is that core systems are not necessarily designed to be changed every minute or every day or every week or every month. We have seen deployment cycles of over 6 months. So as the business, if you wanted to change something on your e-banking, you had to file a change request, and then 6, 7, 8 months later, that change would have been implemented in your e-banking or in your mobile banking. And of course, that is absolutely not a way how to be competitive in this current new reality. Another thing is that it's not user-centric. I also share that at the beginning, you see that basically screens are being pushed out to the end users, where we say you always need to start with the user at first, and then you will look at, let's say, what type of ingredients you need from your underlying systems or from other systems. So not user-centric. And the other challenge that we typically see is it's a one-size-fits-all. It's the same for everyone. But I can tell you, especially, for example, in SME banking or in corporate banking or in private banking, but also definitely in retail banking, every user has different needs, different preferences, and they expect also that type of service from their bank, not only when they talk to an advisor, but also over the digital channels. So how could we solve that? And what Backbase basically is a loosely coupled layer on top of your existing systems. And it allows you to orchestrate and mix and match different elements from your core systems, and also subsequently also from new systems. And that will allow you, and that's something you'll see on the right side, is to still reduce your existing core, but still starting to have the innovation capability on the front end. So Backbase basically is a company and is a software company. And what we have done is we have productized the front end for banks, and the solution that we provide is called the Backbase digital banking platform. That allows you to engage with your customers, with your prospects, and with your employees. So let's zoom in into this blue triangle and explain a little bit on how we do that.
Just a moment. Can I please? We have a question. Therefore, I would like to get it, and it just makes sense. The question is how you define platform. Is Mambu the platform or some kind of big tech identification system, for example, Apple ID or something else?
It's an interesting question because of course it depends on how you define the platform, and it's a bit of a container term. So I think you can define platform from all angles. From my perspective, and I think this slide explains what, from our perspective, the Backbase platform is. It is on the bottom, you see you can leverage APIs from your different core systems, from fintech partners, from other banks, but also from other industries. And that platform allows you to, let's say, orchestrate the engagement with your users, either online or assisted by an advisor, or by being proactive, by sending nudges, etc. So what we believe, and that will allow you to create seamless experiences and basically mixing and matching. And another aspect how you could look at it is that a platform should also be able to scale. And if I link it to the Backbase platform, it's the platform that we currently look at this slide. But if you take it from a more holistic approach, then it's of course the platform business means that you're able to scale. And typically what you see with neobanks is that they start with a monoliner, and that sounds a little bit negative, but I mean it's very positive. They try to do one thing really, really well, build up a first customer base, and because their business is based on the platform, they're able to roll it out globally and scale. And to refer back also to one of your first slides, Oliver, you know, the cost income ratio for the digital clients is much higher. The profitability from these digital clients is much higher. And I think that's also one of the risks for the established banks, where they stay with, let's say, the more traditional clients, which are not profitable, and the neobanks, and the established bank that are more capable to compete in this new reality will take the profit. But time will tell.
So I will wait. If there's another question coming in, I will raise it, but it seems to be it's answered so far. Thanks.
Okay. And it's a very interesting topic. So perhaps we can organize another webinar about platforms, because there's a lot of things in my mind that I can share about that. I will give you one last hint. Look at the market capitalization of Deutsche Bank or ABN AMRO. So Deutsche Bank is around 14 billion euros. ABN AMRO is around 3.8 billion euros. And then look at the market capitalization of a company called Adyen, which is a Dutch company. They're in the business of payments. So if you go to Amazon.com and you make a payment, then they process all those payments. That business model is based on a platform, and that gives them a lot of potential, and therefore their market capitalization is extremely high. And they basically took over from the traditional banks. You know, in the past, when you walked into a shop, you paid cash. All the cash processing was the domain of the traditional banks. Then you had these small ATMs, and then you went online. Traditional banks completely missed that boat. Companies like Adyen, and perhaps not a very good example, Wirecard, took over that complete niche, and banks are not there. They completely lost the customer engagement, and but perhaps something for the next session. Okay, so just to continue, so Backbase is a digital engagement platform or a digital banking platform that sits on top of your existing systems, and it allows you to mix and match existing systems with new systems, and that will allow you to step-by-step migrate to, let's say, a new future architecture that allows you to be competitive in this new reality, just to wrap it up. However, that sounds in theory simple, but I can tell you from experience that in reality, of course, that is very challenging. So allow me to explain a little bit on how we do that. Because Backbase is not just a thin presentation layer, it also comes with a lot of capabilities to help you to overcome the challenges that you might have in your existing core system. So let's zoom into that. And a typical challenge that we see with existing core systems, especially the older ones, the legacy ones, is that they're not always up. That they're sometimes based on batch, they're not real time, they're not always performant, they don't always provide the right data, or they don't provide the right data that is sufficient data for the channels, and they're also not always reliable. So with Backbase, of course, we provide the front end that allows you to do the customer engagement and have a very good customer experience, but it also allows you to abstract the challenges from your core system and overcome those challenges in, let's say, in the front, in our platform. Just to give you a few examples, our layers also include persistency, so we can temporarily store data, we can also enrich the data, we can combine the data with other systems, and that allows you to really innovate in your front end. It also includes, for example, entitlements nowadays. So in the past, you had entitlements in your core, but perhaps in the channels you want to have a more fine-grained entitlements. So approvals, limits, all these type of things. So that's also something we nowadays provide. Then one step further, also the layers are very modular, not only horizontally, but also vertically. That means that for some elements you use, for example, entitlements, but for some other elements you don't. And also that capability to mix and match really allows you to move step by step from, let's say, an old situation into a new situation. And by moving from A to B, also in those sub-steps, you immediately also help your clients with new functionalities. And that is something compared to, let's say, a big bang core migration, it takes a very long time, and in that very long time, nothing happens for the end client. And you refer to Apple Bank. They spent, I believe, around 500 million, and I think it took them like 2 or 3 years to get there. What happened for their end clients in those 2 to 3 years? I'm very curious, to be honest, about that topic. And then in the end of the day, basically what we allow, and this is basically wrapping up the story, and then we will go to two examples, is we allow with this loosely coupled layer on top with those additional capabilities to mix and match old with new, and also allow you to, let's say, to add fintech, and that helps banks to simplify the IT, reduce cost, and in the meantime, of course, increase the client experiences. Let me just pause for a moment, Oliver, and ask you how I'm doing on time.
I think we are good. I was a little bit faster, so I gave you some more time. So I think we are good.
Okay, perfect. So let me share 2 examples, and then I'll hand it over to Alexei. So we have been working with a large tier 1 European bank, and they had exactly the situation where for e-banking and for mobile banking, the front and back, so the presentation logic and the business logic was completely interwoven. They had long deployment cycles, and in order to change something in e-banking, it was really taking a lot of time, and it was even questionable whether they got, let's say, the amount of whether they got the ability to, let's say, to change it, because laws and regulations, security, maintainability, all these type of things were, of course, number 1, and then the business could also say, okay, I want to change something. So what we did is, so of course they looked at the multiple scenarios, moving away from their custom-built legacy core to a complete new core, but then they stumbled upon us, and we came up with the following concept. So typically, if you look at e-banking and also at mobile banking, the 80-20 rule applies, and that's with a lot of things in life, but also here, to a certain extent, it is relevant. 20% of the functionality is used 80% of the time. So think about login, account overview, transaction overview, payment. That is typically being used. I think it should be like the 90-10 rule. The 20% is not often used, like, for example, downloading a PDF document for your tax filings, which you only do once a year. So what we have done is we said, okay, taking the whole theory that I just shared into account, what we have done is we started with these most important journeys, and we basically lifted that up to a complete new user experience. In the meantime, we just reused the old screens, so we just wrapped them in a screen, and we just reuse them as well. So for a client, it is of course obvious that it was different, but since it was only used once a year, they didn't really care about it. And that also allowed then subsequently for the bank to also replace anything in the core and step by step move to this dot on the horizon. So that is low risk, instant value for clients, and of course also from a budget perspective, not too expensive to do something like that. The second example, what I would like to share is a bank that is operating globally. So they're operating both in Asia as well as in Europe, as well as in Latin America. And they're active in the private banking / wealth management industry. And basically what's happening there is the smaller private banks, they can't survive anymore. They can't carry, let's say, the cost for maintaining their own IT systems. They can't cope anymore with the increasing pressure from the regulators. Thirdly, especially in private banking, clients expect a lot, really a lot. So what you see is in general in the private banking sector, you see a lot of consolidation. So in the end, it's you're gonna either be eaten or you're eating. Well, this bank is really eating. So what they already had in place is their own core, also legacy. It didn't have any digital DNA at that moment in time. It was definitely not omni-channel. It was really siloed, and it was definitely not meeting the customer expectations and also not the RM expectations, so the relationship managers. But what they end up with is acquiring some other banks, small, bigger, medium-sized, and actually they ended up with this picture here. And some of them didn't have, let's say, all the channels in place. And then they were thinking, okay, what are we going to do? Are we going to replace everything in the big bang? And it will take us 2 to 3 years, a lot of money, very costly, and we basically don't deliver any value to our clients, or is there a different way? And also, luckily here, we stumbled upon them, and we were able to come up with the following concept. What we basically did is we started to decouple the front from the back and creating a new engagement platform on top. We first started with web for customers, and all the integrations and all the building blocks that we built for web, we also reused for mobile. We also reused the same also for advisors in the end of the day. So that was like a multi-year journey, but it also allowed them to think about, okay, what do we want to do with our core? Because if they would have replaced everything in one go, then they were completely locked in and they had to choose their colors at that moment in time. And by this approach, they can choose themselves when to move from which core to the other. And basically they bought themselves time, they bought themselves a better, let's say, a negotiation position, let's say, towards core banking providers. And that is I really like this step-by-step approach, moving away from, let's say, a vendor lock-in, and in the meantime also thinking about the end user, because I think that's really the key in this in this new reality. Just to close it down, I think it always had to take the user into account. They don't want to wait for 2 years for new functionality. No way. On the other hand, you want to every 2 weeks, every month, you want to come up with new functionality, new things where you really show that you care about them, so that you really engage with them. And of course, you need to have a platform in place that allows you to do so. And of course, it's not only the front end, it's not only the presentation layer, but it's also the core system. So back to you, Alexei.
Thank you so much, Frank. And I think you really put it to the point when talking about the legacy core banking platforms, because this is what we see today at Mambu as well, because those platforms are really built to lock you into a monolithic environment that cannot really adapt to change and support those customer journeys. And actually, Mambu as the core banking platform, as a cloud core banking platform, was built for something completely opposite. And we are calling that Composable Banking. That actually allows you to build the bank you want to be, and the bank that is ready for change pretty much from the start. And we started doing that a decade ago. We started directly in the cloud. So we are the true cloud native platform, not just a shift and lift and let's deploy all the old legacy into the cloud. So everything when it comes to the API first architectures, to the real-time systems, that's something that we have been delivering over the years. And we also actually managed to do that across all of the continents. So right now we are live in more than 60 countries, and we have more than 200 clients. And many of those, if not half, were actually various kind of transitions. So today, I'm very excited to share that experience and the story of some of those transitions with you. But first, let me give you a bit of idea what this composable banking actually is. So on many engagements, we actually have a luxury of helping fintechs and digital banks with a greenfield approach. And in that greenfield approach, quite often they can actually bring the best of breed components for the end-to-end ecosystem. We have been talking a lot about how digital is important, the core banking is important as well, and all of the other components. As they say, the chain is only as strong as its weakest link. So in reality, we see that it's not just onboarding, it's not just the core processing, but pretty much even the commodity services like the payments that you can see on the bottom could be as important to your customer experience as well. In today's section, of course, we're going to be touching more of the transformation topics where you usually have less flexibility in terms of what kind of systems you can actually bring or use. However, we believe that it's always important to actually consider alternatives to the in-house systems that exist. Again, talking about the Dutch banks, I can give you one simple example. I was actually recently moving from Amsterdam to the US, and I actually had to move my assets from Europe to the Americas. And actually looking at what my bank could offer when it comes to the cross-border transfers through the SWIFT, through the currency conversion and the fees, was actually incomparable with TransferWise, which managed to give me a much better offer. So essentially, I had to move my money off my bank account, and they really lost on the lot of revenue that they could get from those transactions with me. And in many cases, if you look traditionally, the banks would see, hey, but introducing the new vendor is actually quite costly from various aspects, from the big CapEx investment to a lot of integration that you need to build. But we also see that the modern cloud native technology and the modern way of SaaS delivery when it comes both to the onboarding and to the pricing actually makes those solutions quite often even more cost effective than trying to adapt or to upgrade an existing systems that exist within the bank. So even though we're going to be talking about how, let's say, we can reuse many things that already exist in the organizations, and in my example today, that's going to be the Acme Bank that we're going to be transforming. We believe that it's quite important, let's say, to keep your options open and even look at alternatives no matter where they are in your stack. Those kind of transformations where we already start with the transitioning from the existing infrastructure, we also see some people in the field are calling us the brownfield transformations. And if you look at where Mambu going to be sitting with those transformations, as Oliver was saying, we are the heart. So we are in the center of the end-to-end banking landscape. And the three main components that we are essentially providing that would help you to actually go with that transformation, the product factory, subledger, and the ability to manage customer data. So first, I will start with the product factory. Essentially, the product factory allows you to support the full servicing cycle of deposit and lending products, all the way from the SMEs to consumer products, from mortgages to leasing type of products. And what is most important, we can do that both for the new products that you want to bring to the market, as well as to move the existing ones. And I'm going to be talking about that today. What are the different ways how we enable that? Mambu also has actually been built to be part of this composable ecosystem if you actually have multiple cores within the organization. So when it comes to actually providing, let's say, a real-time balance sheet or the accounting capabilities, we use this concept of subledgers. And the idea of the subledgers is that you can actually have multiple of those in your organization. So you can have a subledger in your existing core, you can have a subledger in Mambu, And all of those subledger could actually be rolled into a single general ledger that exists as part of the organization. So the way we were designing the system, both let's say with the product factory and with the subledger, was actually to be able to be easily integrated into the existing architecture or in the existing landscape that existed in the bank. And last but not least, the customer data. So when it comes to the customer information, you see that different organizations are taking different approach. They may be creating some separate databases where they would want to store the single version of truth. And especially, let's say, if we would work with some telcos that may even not be the core or the CRM, that could be a really separate data store. In other cases, it could be CRM, it could be the previous or the legacy core banking that you have. So the great part of the Mambu platform is that when it actually comes to the customer data, we are very flexible there as well, which means that we have a data model that is fully extensible. So you can extend it with the configurable custom fields if you want to store more information. But we also can go with something completely opposite. So we can actually use our client information file to a pretty much minimum and actually refer to the customer information file that sits in the core or in the CRM. So all of those three components essentially with Mambu bring you much more options for the transition rather than this one big bank approach where it's all or nothing. And it really gives you much more flexibility in terms of deciding which of those components you would actually want to bring over at which phase. And of course, this comes to the core solution. But of course, as you saw from the Oliver slides, this core solution needs to sync with other systems. It needs to be integrated into the underlying or the group capabilities of this Acme Bank in this case. And this is where Mambu also brings the process orchestration capabilities. So the process orchestration capabilities is essentially the technological platform that helps you to build on top of our standard APIs and actually extend them with various business processes or with connectors to other third-party fintechs or an existing solutions as well. So let's actually try to see how an example API architecture can look like, and let's talk a bit about connectivity. So if you are bringing the new core, if you are bringing this digital platform, how we can actually bring all of those systems together. So what we believe is the most important when bringing of those solutions, especially looking at large banks who have very complex connectivity needs and require multiple API building blocks. In that context, we believe that putting a framework for ordering and structuring those building blocks is actually quite crucial. Because if we are talking about the agility and the flexibility that Backbase and Mambu want to bring to the market, it only can come if we actually have a right multi-tier architecture that has distinct layers. We're going to be starting from the bottom with the existing systems that you have in your institution, and in this case, in the Acme Bank. And those are typically various systems of records. So in the bank, it could be a general ledger, it could be a regulatory reporting system, it could be multiple proprietary databases where you store customers, you may store borrowing data, some of your risk data. And often those systems are actually not accessible due to connectivity concerns. So APIs are actually something that can provide an accessibility to those systems of record and actually can help us to isolate those downstream integrations and actually enable them for all the layers that we're going to be building on top of them. We see that many of the organizations are using various techniques like enterprise service buses to hide those systems, such as MuleSoft. In case of Mambu, we are also actually introducing the new component, which is called the Mambu integration bus. And this component will essentially help you to build this bridge between those legacy systems, which could be a file-based batches or so web services that you need to integrate with modern systems like Mambu or Backbase, providing real-time APIs, and actually allow you to enable all of this architecture. So those system APIs will really help you with the modernization of the existing legacy systems that may not be as part of your core banking migration. If we look at the layer on top, this is where we essentially have the process layer. And this is where we're going to have all the different business processes that interact with the data and help you to expose those processes to the experience API and to the systems on top. We believe that all of those processes should be fully isolated. The example of those processes could be an loan origination process or repayment processing. And this is where Mambu also provides a component called the process orchestrator, which essentially helps you to design those processes to combine multiple system APIs, which could be modern system APIs like Mambu Core Banking, but also could be your legacy systems that are just wrapped into modern facades and still give you all of the flexibility to build this process layer on top. And last but not least was something that also Frank was talking a lot about, was essentially the experience layer. So in today's world, as you can see, data is really consumed across a very broad set of channels that goes from mobile apps to the branches, to the open banking, where account information service providers like Plaid over here may want to retrieve actually the same data, but just in a different format. So those experience APIs can actually decide and reconfigure how the data is presented, and what is most important, securely consumed with use of entitlements by all of those different channels, but still, let's say, reusing the same process APIs that are actually provided by the process layer and by the underlying system. And also this experience API, or if you look more at the broader presentation layer, this is where the sort of integration is starting. So we ultimately start with the experience system integration. So it actually helps us to establish the foundation for doing the rest of the transformation. So this is where, if we start integrating those systems at the presentation layer, for the customers, the divisions between the underlying systems are actually starting to disappear. So with Backbase, you have a great omnichannel platform that will help you to enable that through the user experience that is same across all of the platforms, but also through the identity, which is centrally now for the users. And me as a user, I don't need to actually think what underlying systems I'm using, because all of that is actually unified at this presentation layer. So now let's actually take a look at what kind of patterns could actually be introduced at the layers below their presentation one. So first, let's start with the process layer integration. So on the process layer, and what we are talking about here is more of integration that enables you to automatically initiate actions on one of the systems based on the actions from the another system. So without the process integration, both the users or employers will actually be required to manually intervene to coordinate multi-system activities, put the data into multiple systems as well. So to accomplish the process integration, systems need a way how they can actually share the events one with another. And with Mambu API first design, we actually supporting that both through the synchronous APIs when you're sending or retrieving data, but also with asynchronous APIs. So this is something that allows systems to get notified about the updates, let's say, that are happening in the Mambu. So what we're allowing you to do on the Mambu side is the ability to create custom triggers. So then you can actually attach them to various events that are happening within the Mambu platform. And we can expose those events to other systems through the webhooks or through streaming APIs. And on top of that, we also have the Mambu process orchestrator that could react to those triggers and then orchestrate those events across other systems by applying additional rules and transformation. So let's say if I'm creating a new client in Mambu, on the process orchestrator layer, we can actually then create, let's say, a new client in your Oracle CRM, or make a certain action in your SAP marketing platform. So if you have those systems that are actually enabled for the real-time communication that actually supports this event-driven architectures, this is when you can actually get to this level of the process layer integration. The second type or the integration pattern that we are seeing as well is something that we are calling the data integration. So the integration on the data layer actually eliminates the need for the users to move between multiple systems. In today's world, we typically do that using the concept of the ETL processes, where we're going to extract, transform, and load all of the data from one system to another. And those transfers can happen on schedule. They can be triggered on certain events, or those could be like a polling systems. And of course, data could be processed using the real-time APIs that are being exposed. In case of Mambu, we actually support a variety of the ETL scenarios through our REST APIs that allow you to pretty much export all of the data from the system, to streaming APIs that allow you in the near real time to stream all of the events from Mambu into your target source. And sometimes, especially for the ones who have seen those ETL projects in the banks, the traditional ones may actually involve months of work and bring a lot of complexity. So we also see that industry is doing some shift there and is sort of building like the complex ETL processes. They are moving for something that's called ELT, which is actually stands for extract and load, and do the transformation later. So this is where we see that the right data strategy is quite important throughout the organization. And let's say Stitch Data, as you see in this example, is one of our ecosystem partners. It's a solution from one of the leaders of the ETL industry, Talent, that allows you to, in a configurable way, extract the data from a number of standard platforms really in a matter of days when you come to building those integrations. And then it will also benefit from, let's say, the way how the new business intelligence systems are built. So if you look for Looker from Google, or if you look from Tableau from Salesforce, you would also see that those systems actually do not require the transformed data up front. They can actually just work with the raw data that's exported from your core banking, from your CRM, from your general ledger, and then they empower your data analysts and data scientists to actually do those transformations themselves using those powerful tools. So when it comes to integrating into the group functions like the regulatory reporting, when it comes to integrating into the general ledger and accounting, we believe that putting the right data integration strategy is crucial, and selecting the right tools is very important as well. So now that we know that we essentially have different sort of layers where we are building those integrations, We actually have different patterns how we can do that. Let's look at a couple of the examples and see how we managed to implement some of those scenarios. So the first example that I'm going to be guiding you through would be example on the lending space. So within Mambu, as you see, we have quite a diverse set of customers, which goes from the fintechs to banks, to lenders, to non-financial institutions like telcos such as Orange Bank. And all of those customers have configured over 6,000 different products within our platform. But of course, every institution is different, and everyone's journey is different as well. So let's look at the first transition use case that we have for you today, which is a Creditec or Monito, which is one of the lending providers who was migrating from the in-house lending system, and they were transitioning to Mambu across multiple countries, and in the end, they were moving more than 100,000 different clients, and actually hundreds of thousands of both active and historical loan accounts to the platform. So what Creditec was doing was actually very similar to what Oliver was talking about earlier. So in their approach, they actually introduced Mambu as the parallel core system next to the existing platform that they already had within the organization. And as the first phase, they actually started driving the new customers and the new accounts to the main platform. So they did have this digital layer that allowed them to select where the originations are going. And they targeted all the new ones to their target platform. What they started to do next was also looking at the customers who were, let's say, refinancing and let's say rescheduling their loans. So this is where it also brought them opportunity to actually refinance or reschedule them to the new platform. The next step, this is where they actually were starting with the historical migration. And all of those steps they were initially just doing in one of their regions. So we work with a multiple organization that are also having their operations across multiple countries. And this is where they may also have different core banking systems across those countries. So Creditec was this level of complexity, different products across different countries. So they started with a single country where they sort of perfected their journey. And after that, they actually moved to other countries. So from Poland, it was actually Spain and Russia, where they started doing that transition. And you can see that even in, let's say, that complex case of sort of doing the open heart surgery, having multiple systems running in parallel, doing that sort of transition from one channel to another, they still managed to complete it in 10 months, which actually was multiple countries and multiple products. So let's see how we can even challenge that 10 months, which for many banks is already a very long period, with something even shorter. And of course, Frank was talking about the monoliners earlier. This is an example of the monoliner taking us like 4 years back when we just started working with N26, who at their time was making a transition from a banking as a service platform where they actually had a number of products provided to them by a single provider, which was Wirecard. So N26 did that transition way ahead of time. And this was actually was one of our fastest migration. which took actually the period of less than half a year. And during that time, we migrated roughly, again, 100,000 account from Wirecard to Mambu. And the outcome that N26 actually got as part of this transition was a lot of flexibility that they actually got when switching to composable banking. As they were moving from this legacy and monolithic approach where all of the ingredients were pre-configured and pre-selected for them, and that really limited their growth, with the composable banking, N26 was actually able to select various partners, like let's say Allianz for insurance, the investment partners, TransferWise for the cross-border. They managed to renegotiate their contracts with their payment providers and with the card issuing. But what's most importantly, they managed to then build a platform. They helped them to actually scale globally across the regions. And today, looking back, let's say this 100,000, when N26 is close already over the 5 million accounts, that's something that they definitely wouldn't be able to actually scale with their platform. So as Frank was saying, we see that many of those neobanks, they actually would be really get into the excellence of building the single product and then seeing how they can build their super app, as some of those neobanks are calling, or how they can move from the retail to commercial to investments and to the other branches. So this is the example where also the composable architecture really helped them not just, let's say, to make that transition, but also to scale that all the way up. So probably looking at those two examples, I imagine there's also going to be some questions. So how did you actually, let's say, took and sort of lifted and shifted all of the accounts and products that existed in those platforms? And this is where in Mambu, we actually have multiple approaches how we can do that. The traditional approach that we have been doing with many of our greenfield customers is something that is utilizing our existing product factory. So this product factory actually provides you with a very simple to use wizard that is very flexible if you're launching the new products, because you can literally configure the products that you're launching in a matter of hours, and you can go with them in a matter of days. And especially as you scale your operations across the globe, as you scale your operations across the market and your products, this is the flexibility that you're looking for. You're not looking to wait for your core vendor to deliver some functionality that it needs to go through like a 3 or 6 months core banking upgrade process. You really want your business users to have the full flexibility to build and configure the solutions. So all of the 6,000 plus products that we have configured or our clients have configured actually in our platform, they are all done through this flexible product factory configuration. What we, however, are seeing more and more as we are going into the transformation phase is that sometimes, let's say, even our highly flexible product factory is actually getting stretched to the max. And this is where we are actually introducing next year a new approach, how you can actually get even into a lower level of flexibility with Mambu, which we are calling Product Factory 2.0, which essentially brings a domain-specific language that is still a standard and configurable platform. So that basically takes our sort of visual configurator and gives you much more flexibility with the DSL that helps you to operate underlying product capabilities and actually create even some more, let's say, bespoke or some, let's say, legacy contracts that, well, sometimes we actually see that we need to migrate products that are not even legally correct in terms of calculating the interest or doing some things. So basically stretch the boundaries, yeah, even beyond reasonable, as we would typically call it. But I think in the nutshell, when we are going to those transformations, and I think this is what Frank was also telling in the beginning of his session, the most important thing is the mindset. So when you're doing those transitions, you shouldn't be actually starting with, okay, what kind of products we actually had, and we actually need to implement them one by one, exactly in a way that they were in the previous core system. We really believe the same approach comes to building your actually composable ecosystem. You really need to buy or to use commodity where you just need to reach the parity. So if you have some, let's say, product requirement that doesn't really give you any kind of competitive advantage for your customers, then just take a standard configuration or the standard product for the accounting or for, let's say, the loan configuration. However, if you believe that it's really your competitive advantage, then build it. So same, I think, looking at the Backbase platform, you have an ability to take an existing widget that just gives you that parity with the other vendors. Like, as Frank said, downloading your tax report is not really something that will make you different. Well, unless you're like a Robinhood or some other investment banks that may require you to provide a bit more flexibility with that. But other than that, buy for parity, adopt for parity. So take the standard Mambu products, take the off-the-shelf ecosystem partners, take out-of-the-box Backbase widgets for the parity, and then build this for competitive advantage. Really see where your bank wants to differentiate and focus all of your efforts on there. And this is where you can also rely on sort of the network effect, both of the Backbase, of Mambu, of Capco, to actually bring up those components together and really speed up your implementation. I think that was it on my side. So I'm not sure, Oliver, if there were any questions throughout that discussion.
We still have a part from Frank, but I think we
Exactly.
can at least start with some of the questions, perhaps, as we already have received some of them. Perhaps, if you allow me, the first question I would even give to Frank. Frank, there's a question: when you decouple front and back end with your platform, how do you become faster than the legacy batches? How do you avoid waiting for those?
Okay, that is an interesting question, because it, of course, it fully depends on the system that is in place. So what I've been doing is, of course, generalizing what we see in the market, and sharing, let's say, the generic challenges that I see with the banks that we are talking to. So let me rephrase the question. So when you decouple front and back with your platform, how do you become faster than the legacy batches? I think it's what we have seen in the past, that front and back, so the presentation logic that sits in the front and the business logic that sits in the back, that is interwoven, and therefore the ability for the bank to innovate at the customer engagement layer is low, because there is dependency to the back. So typically you see long deployment cycles of every one or 2 or 3 months. We sometimes see even over 6 months, and yeah, that will not allow banks to compete. By decoupling the front and the back, you can, because you can't simply change overnight a legacy system. It's designed how it is. But by decoupling, you can definitely change, let's say, the front end. And then you can really reuse what you have in the back, perhaps complemented by a neo core or a lean core or composable core like Mambu, and then that allows you to innovate in the front, and that will give you that, let's say, for example, if you work in the agile methodology, that you're able to deliver to release every sprint, and a sprint is, for example, 2 weeks, and that will allow you to become faster. And I think what is also important to say here is that, if you do things in big bang, it is always questionable how customers will react to that. And then you release something, and then oh wait, this is not really working, so let's fix that the next time. If you do it in very small increments, you will be much faster to, let's say, something that customers really like, because users, you can just test it out. And that is so I hope that this is answering your question to a certain extent. I'm more than happy to take it also offline
We'll see.
I'll probably will challenge that even more, saying that even the front and back decoupling is not enough anymore, because you also need on the back end as much decoupling of the systems as possible. You don't really want to depend on the single vendor who actually decides your innovation on the payments, on the cards, and on the other domains. Especially you have different teams within the organization. This is, I think, where also Frank's topic about providing a platform where you can have different product teams building, let's say, their view on the commercial banking shouldn't really depend in any way on the retail banking team. So they all should be able to bring whatever kind of enablers they would need for that composable approach.
Okay. Thank you. Another one. This is for you, Alexei. When you picture a single platform, does that imply single instance? If so, how do you cope with data residency regulations?
Yeah, so I think both for Mambu and for the Backbase, we can be deployed in the cloud in a completely isolated environment for a specific bank, which means that solutions can be delivered as SaaS, but in a fully isolated and secure environment. So on the Mambu side, we actually have two types of environments, a multi-tenant and dedicated. So for the banks, we of course go with the second one. So it doesn't exactly imply a single instance.
Okay, thank you. Another question, which is for both of you. How many of the Mambu and Backbase clients have an European mother company? What is the difference between Mambu and SAP for HANA? If we start with you, Frank, regarding the European mother companies of your clients. I think I already know some of them. I believe there are some.
Yeah, so we have over 150 banks on our platform worldwide, and I always need to say those are really banks that have strategically standardized on our platform. So it's part of their enterprise architecture, and they believe that with that they are able to compete in the future. Let me think what I can share here in this public webinar. We have at least 50-60 banks in Europe on our platform, and then that doesn't mean that we have 50 or 60 implementation. You can easily multiply that by 2 or 3 or 4, because Backbase is then used in multiple countries, multiple lines of businesses, and so forth. And hopefully also in the next few months, please follow the news on the Mambu and Backbase side, because there is a lot of promising stuff coming up. But since we're in the financial service industry, I can't just share what we're up to, but there is some really interesting stuff coming up, and hopefully we can share that very soon.
Looking forward to this. Alexei, we already saw some of your European clients as you have used them for the cases. So perhaps let's focus on the other part of the question. What is the difference between Mambu and SAP for HANA?
Yeah, if you look at SAP, but I think it's not just SAP, but also many other vendors, let's say Oracle, Temenos, and Infosys, we typically calling them second generation vendors, which actually started renovating of their more legacy platforms that were built in the 90s with various techniques. So in some cases, they were trying to lift it and shift in the cloud. In other cases, they would be trying to implement some of the big data frameworks or others. However, we see that more of when you try to solve some problems with technology. So you would still have more like a traditional approach to building the product, which comes all the way from how the product is being designed from the roadmap perspective of having, let's say, a 2-year roadmap versus a flexible 6-month roadmap that adapts to the markets and to the challenges. It comes to things, if you are designing the things API first, or let's say if you're talking about Frank and Backbase UX first, because we also see traditional vendors saying that they have launched a new digital platform, but they don't really have this digital DNA. So when it comes to Mambu, I think what we have been doing in 2011 or started doing, we have been the first cloud native SaaS core banking, and we have been doing that ever since. So this is where we see that it's usually more like apple to oranges of a comparison with the vendors who sort of are trying to jump on the new technologies list. As to be honest, I think you would go into any presentation today and you would see cloud, API, customer experience. However, you actually need to look at the second level of the detail, what you actually are getting. And I think this is where our customers and our references probably say that for us.
Okay, thank you. Perhaps I have I have much more questions now. Perhaps Frank, if you would like to continue, just closing the presentation part, and then I will bring up all these other questions afterwards.
Yeah, perfect. I will do that. So the next part is about stepwise migration from old legacy infrastructure to, let's say, the new state-of-the-art banking systems. And I actually, just a couple of days before this webinar, I stumbled upon a report of McKinsey about the 3 options for banks that they have to replace their cores. And of course, on the one hand, you already talked about it extensively. It's the big bang replacement of core, high risk profile, low speed, no value for end users for a long period of time. And then I stumbled on this really nice wording called journey-led progressive modernization. So I have to admit I have been practicing that word, journey-led progressive modernization. But basically the step-by-step approach. And let me talk you through. So I will talk about journey-led progressive modernization, but I will also talk about greenfield tech stack and how you can set it up, and especially with Mambu, because that will go extremely fast nowadays. So in order to allow for that journey-led progressive modernization, of course, you need to have a tech stack that really fits with that. And that means not monoliths, not decoupled, but really like Lego style building blocks with ready to go accelerators. And that is exactly also what our platform, but also the platform of Mambu provides. You know, smaller Lego blocks that you can mix and match and let's say can fit towards your needs. And that is allowing you for, let's say, this modernization step by step. So things like login, security, onboarding, money movement, cards management, all these type of things you can basically lift out of your existing silos and start innovating there. And I've got a few examples of that. Because once you start to lift that out, you can also start leveraging, let's say, the capabilities of, for example, Mambu or from, for example, Backbase. And leveraging, for example, Jumio for KYC or Tink for open banking or for accounting, Codat, for example. And then you really put, and that's also referring back to you, Alexa, is really, as a bank, you don't want to focus on infrastructure, integration, on maintenance, all these type of things. As a bank, you want to focus on what is my differentiator? Why would customers bank with me and not with someone else? And I think apart from, and I like your slogan about parity and about differentiation, and it is exactly what we bring to the table. All these things, since also Backbase as well as Mambu are cloud native, we can spin it up almost instantly, and immediately you're, let's say, at the right level, and from there you can start differentiating. So also the whole mindset of our clients. Sometimes we're also like not just a technology provider, but I think we're merely a provider that's really helping changing the thinking pattern at, let's say, our customers to really think about, okay, what is now really our differentiating edge? And let me share one example, which I really like. As in my previous 2 examples, I spoke about really large banks, really large globally operating tier 1s. This one is actually a very small bank. It's a tier 3, perhaps even tier 4 bank. In Austria, they have less than 1,000 employees. And they're dependent on a central front-to-back provider for both e-banking as well as mobile banking. And they do a decent job. And it's definitely not bad. They do a decent job. It's a good system. But actually, the C-level of the bank is actually having a much higher aspiration level. And so they say, well, it's good, but it's not good enough. We really would like to bring it further, but they can't move away from their core. It would be too risky. It would be not be doable. So what they said, okay, let's start with onboarding. And those were the journeys that we have available, and you can quickly deploy them And then you can start thinking about, okay, what do we want to have onboarding? In this particular case, the branches are still very important for this bank. But it's also very costly. So what I wanted to do is, okay, if you have, let's say, an 8-step onboarding journey, at any moment in time, the client can move from online into the branch or to the call center. And actually you get incentivized if you stay in the online steps and try to fill in all the fields and upload all the documents before you talk to an advisor. So what I really like about it, they said, okay, let's move on and let's start with a couple of journeys. So we delivered home loan, car leasing, and onboarding for them. And then actually, and they also won an award for the best home loan advice because, yeah, it hybrid model, this omnichannel model was really recognized by clients as being very, very suitable for their needs. And now, of course, with COVID-19, they were very happy. It was an unfortunate. I'm looking for the right English wording, but let's say a combination of circumstances coming together, and they were really well prepared for, let's say, that situation. So what they're now doing is, on top of the platform, they're adding journeys and journeys and journeys, and they combine it with, let's say, the existing e-banking with new journeys. And the second and the last example of journey-led modernization is what we call Juice Pro by Mauritius Commercial Bank. So as you might know, Backbase is operating globally, and we focus on one thing. It's the digital banking platform, digital engagement banking platform. But we did it all over the world, from Mauritius to South Africa to New Zealand. And actually what happened with Mauritius Commercial Bank is they have a retail banking department and they have a corporate banking department. But actually what is happening is that the SMEs, the small and medium enterprises, fall between wall and ship. And actually that segment can be quite a profitable segment if you serve them well. And they also had, let's say, this locked-in situation with a core front to back tied in. And they said, okay, let's invest in a digital presence exactly for this SME. So within 6 months, we hooked up our platform and our out-of-the-box SME app to their core, and then in another 4 to 5 months, they further optimized, let's say, the app to make sure that it really fits with their specific needs and their specific requirements. And that's what I really like. So it's really a loosely coupled front end, allowing for a customer-first SME banking mobile app, and it's called Juice Pro. And you can download at our website a nice case study around that. And then, of course, we talk about Greenfield. And I know that in our previous series, we spoke about Greenfield, but this is also one of my favorites because both Mambu as well as Backbase, we have been investing heavily into our platform. So at Backbase, we are now close to 1,000 employees, of which 500 sit in R&D. That means that we spend around 40% of our revenue in R&D. And that's something we have been doing now already for the last 4 to 5 years. Because we really believe in what we're doing. And I think the same counts also for Mambu, and that's something you see back. So with this rich layer, with this rich abstraction, and also with additional functionality to, let's say, to abstract functionalities like entitlements, like identity and access management, like persistency, like enrichment, we have a very powerful platform. And then combined, based on APIs with Mambu, and of course that integration is also covered, we allow clients to just act as the orchestrator. Orchestrate your differentiation, orchestrate which type of fintechs and other non-banking or banking services you would like to combine. And with that, we are able to really deliver neobanks, or let's say banks on a neobank level, let's say within 6, 7, 8 months nowadays. And that is what I really like. So we can do that both for retail banking, of course, both for customers as well as employee, because it's omni-channel, for SME banking, corporate banking, and also for wealth. And I think that is really a beautiful combination. That's also the reason why we are working a lot with Mambu in a lot of these engagements. And also, last but not least, I think this is also in link with what Mambu says about parity. So we provide a bank out of the box that is able to compete in this new reality on neobank level, So on the one hand, you can go really fast, but in the same architecture will also allow you to build your own differentiators. Because we don't believe in a one-size-fits-all. We really believe in, let's say, and we always recommend our clients to have a bit of an engineering culture in there, so that they can really own the domain of digital and digital engagement with your clients. In the meantime, in this room, it's now 27 degrees, moving to 28, I think. It's 33 degrees Celsius here in the Netherlands. It's a beautiful summer day.
Yeah. All right.
Thank you, Oliver.
Thank you. So we have the question and answers part. So I will continue reading through the questions and distribute them. I think we haven't had talk about the process orchestrator. Alexa, in what aspect is Mambu's process orchestrator and integration bus different from the likes of MuleSoft?
Yeah, that's a very good question. So first, let me give you an idea. Mambu is not in the business of building the ESBs and the process management platforms. We are in the business of the core banking, and essentially we are trying to make those core banking platforms to really work for our customers. And of course, that also means time to market, and that means the ability to integrate with the existing systems. So those are actually the reasons why we actually introduced additional components to our platform. So we can actually either extend our core solution with some processes, like the repayment processing example that I mentioned earlier, or provide pre-built integrations into the other systems. So you can think of the process orchestrator and integration bus as accelerators. We also pre-build connectors for various systems or various partners in the ecosystem using those platforms. So in case you actually don't have an established platform already within your organization, we would definitely recommend you to take a look at our integration bus and the process orchestrator. In case you have one, you can actually just, let's say, use MuleSoft to do that integration. To give you an idea, let's say one of our key customers, Oak North, actually did exactly that. So they actually are using MuleSoft together with Mambu, and we actually don't have any kind of proprietary APIs that are exposed to our process orchestrator integration bus that are not exposed to the other systems. So it's more, let's say, a matter of choice and where you are in terms of your overall enterprise architecture.
Okay, there's another one regarding the process orchestrator. How does it deal with a satellite system which is not available 24/7? Can you please later share some information on the end of day process? Does the system making accounting entries or just posting them to the central general ledger system?
All right. I think I probably will start with addressing the first one. So let's take me and Frank. I mean, I trust Frank a lot. But in terms of Mambu and Backbase, if you look at me as an architect, those two systems actually shouldn't trust each other. So when you are building a distributed system, it's quite important to think about resilience. And this is actually one of the reasons why, let's say, on the Backbase side, they introduced this digital banking services layer that actually helps the front end be resilient of the failure of the other systems, even if you have the system like Mambu, which is 24/7 available. So the same approach we're actually doing with the process orchestrator. When you're designing the process there, when you're building the integrations, it actually has a resilience patterns in place. So first, it has patterns like a retry or circuit breaker, where if it's integrating between system A and B, it can actually do a multiple retries and then hold the message until the other system goes available. But in general, that's the approach for actually building those composable architectures. You now don't have a single point of failure, which is good at one side because you're not depending on one vendor and you can build something that really scales, as we can see on Google, Amazon, and other organizations. But of course, it comes also with a certain responsibility, as you really need to select systems like Backbase or Mambu that actually have all those resilience, design thinking, and building blocks in place.
Okay, Thank you.
And I think for the questions, let's say, regarding to the end of day process, you can definitely find that in our documentation website, which by the way is fully public, support.mambu.com. You can just go there and look for EOD. And the same comes to, let's say, the way how Mambu processes the accounting. You can also find it there, or send me a message on LinkedIn or organize a call with us. I think it probably would be a bit too technical, but to answer short, we can do both. We can generate journal entries, or we can just generate transactions that you can process later yourself.
All right, thank you. Also, thank you for taking care of the time. Next question: what tools, engines does Mambu use to migrate data from legacy to Mambu? For example, data loan contracts, saving contracts, etc., which definitely also matches to the story we have presented today.
Yeah. We're going to be releasing a white paper fairly soon, which actually going to be talking about the migration process. So this is where we're going to be covering many of those topics. But quite often, it's also a combination of what partners like Capco are going to be bringing to the table in terms of the understanding the both system sort of requirements and configuration and doing the transition. So in some cases, it could be a handwork. In some cases, it could be the automation tools. And as part of this white paper, we are actually planning to explain the different, even like going even more technical than today, of how you can actually take the data and move it further. So subscribe to our news, and as soon as we have that, we're going to share that with you.
Okay, thank you. Another one. On the product factory part, what is the level of composability, meaning numbers and examples of independent business components to can provide step-by-step IS transformation program?
Yeah, very good question. I believe that goes, I'll answer it, let's say, in a two-way. So first, if you look at the existing product factory that we have today at Mambu, we're going to be more than happy to actually set up a call and provide you the demo of the real software in terms of what kind of components you can configure, like an interest component, a repayment component, fee component, penalty, and so on and so forth. So you actually can see the flexibility of that. And by the way, again, I'm going to make a reference to support.mambu.com, which describes all of those components in a greater detail. And of course, for the new product factory that we're going to be launching, stay updated to our releases. So we plan to launch our new product factory next year. So this is when quite soon we also going to be sharing some of the roadmap updates with both of the existing customers, or also if you're a prospect, feel free to reach out to us, and we can take a closer look at your use case and see how that could be relevant.
Thank you. So then it was understood that Creditech in this 10 months only migrated personal loan product. What if the bank has interlaced the loans database with other products data? How do you go back and forth between the new system and the required legacy you need to access?
I think indeed, as I mentioned earlier, there is not a, let's say, one size fits all. So for example, not all of the organizations can actually do this transition and keep two core systems in parallel. Also, some organizations indeed may have, let's say, their, I don't know, mortgages connected to the savings accounts. So think of like an offset mortgages that exist in Australia. So actually right now we have a couple engagements in that region where we are actually going to be migrating both of those products in the same time. So this is where, yeah, it's a bit more of a surgical approach. I think going again to our open heart surgery, you can't really just cut everything and then put it off. You actually need to do it step by step, see what kind of links you have between the systems. And this is where on Mambu side, with our solution engineering team and the solution architects, we can help you with that. Capco brings a lot of experience across different customers and different transformations, how that could be done. And same for the Backbase, it's not their first rodeo either. So I believe we have here at this table a team that have seen how those transformation can actually happen and what sometimes is the best way to do that.
Okay, thanks. Next questions are for both of you. So Frank, so I hope you're still with us. Can you share some cost indications of the projects mentioned? I think that's a tricky one.
Yeah, but sometimes people are always doing it's a little bit difficult about these type of topics. I'm typically not. So if you look at, let's say, the Backbase today, and we are in the market already for over 15 years, where we started as more as a toolkit, as a framework, just as a thin presentation layer. I can remember that some of my competitors in let's say keynotes at events, they call Backbase the lipstick on the pig and nothing else. That might be true, let's say 5 or 6 years ago, but nowadays Backbase is so much more, and that's because of those investments that I referred to. So actually that means that if, for example, if you want to build a greenfield bank, at day one, if you just license the software and you could combine it with Backbase as a service, that means including application lifecycle management, including managed hosting, and the same, of course, for Mambu. Then actually at day one, you already have a lot. Of course, with that, you can't go live. Right? So you need to have a team that can focus on, let's say, what will be our differentiator? What will be the hero function? That's basically, typically we talk about the monoliner, etc. So you need a team to let's say to think about that, and to let's say to compile all these elements together. That typically takes not a lot of coding effort, to be very honest, not a lot of development effort. It's more about the thinking pattern, more like UX, etc. So if you look at, let's say, how much time it takes us to take an average team to bring something to production with a tangible MVP, minimum viable product, it takes us around 6 months. And in those 6 months, actually 2 to 3 months is actually, let's say, the construction work, the development work. The other months are more transition, but also at the beginning you have intake, inception, setting up the foundation, these type of things. On average, you need, let's say, a team of, let's say, between 8 to 9 people. Then, of course, it depends on who's going to implement it and where. But let's say, yeah, then you can do the math. So I have now seen the latest quotes where you can build a bank for less than $5 million. And I can tell you that bank is really on neobank level, and I'm sure that if they play the cards well, they can compete in this, what we call the neo reality. So, and of course, I've also worked with banks that have a budget of over $200 million. They're quite successful nowadays, by the way. It was the bank I spoke about during the onboarding event, but anything in between. So I hope that answers the question.
And I like the way that you explain that also some consultancy is relevant in that regard as well. I appreciate this. Thanks. Alexei, same question for you. Cost indications of the projects mentioned.
Yeah, I think what starts really to change in the industry, and I think Frank was also talking about, let's say, how the positioning of the companies and how the services are being offered is changing. So previously, if you look at the core banking system migration, you may have an initial price tag of a CapEx, and then it resulted in a 10-year project that this CapEx was like 10 times more just through the OpEx and through these migration services provided by the vendor that actually even resulted in something that has to be written off completely. I think what's really changing is how you today look at what the vendors provide. So when it comes to, let's say, the value-based pricing, the value-based selling. So today, you're not really looking at the transformation from the aspect of how much money do I spend. So today you're looking, okay, how do I manage my risk? How I do it step by step? How do I have a very transparent way in terms of what I'm actually doing and what kind of outcomes I'm getting? And the software, like let's say Backbase or Mambu, through our value-based pricing, through our SaaS offerings, actually gives you a very clear boundary. So you can actually start small. You know what you are paying for. You're starting step by step. You have a very clear separation between the migration services and the software. And because the pricing is also the usage based, you increase that as you migrate more and more things. So if you ask me, did the migration just become simpler and 10 times less? Well, no, it didn't. I mean, it would be a complete magic, right, if that would happen. I mean, we don't see that big steps given today's sort of technology and the scale of innovation. But did it become more transparent with the way of new software is delivered, with the way of new software is priced, and the services that are put around it? I would say definitely yes. I think I would probably avoid saying some numbers, because also on the Mambu side, we actually don't provide professional services, but definitely we provide much more transparent way and estimates of what it takes you to do those migrations.
Also, thanks a lot for the hint to the professional service. Now, perhaps the next question I would start answering, as I feel based on my kind of experience, how are your platforms supporting captive finance companies? I used to work for one of those. So knowing both platforms, I'm easily, and you can of course disagree, but I would say it's easily, as you are very flexible, adapting to the different processes and products. So I would answer that question that it's definitely fully supportive and fully flexible. But perhaps, Frank, you could elaborate a little bit more. As far as I remember, you even have a productive client in the captive business.
Yeah. So if you look at, let's say, on the highest level, we provide pre-built apps, but those pre-built apps are only there to kickstart projects. But if you then look at those apps, those are then based on all those modular components. So you can also go one layer down, and there you'll see all those components and mix and match. And those components are built on top of the engines within Backbase to orchestrate the experience, and that is then built, for example, on top of Mambu. So if you look at, let's say, any use case in the financial service industry, you see always the same patterns. Someone needs to log in, someone who lost a password, you would like to set entitlements, you need to approve something, you need to upload a document, you need to make a payment, you have a transaction overview, you have a list of products. So the way how we have built up our platform is not like we don't have functionality to show a list of accounts, though we have a functionality to show a list of products, and a product could be an account, could be an investment portfolio, could be a insurance, or could be a movie ticket. And that is the level how we have built it up. So of course, in our go-to-market, and if you look in our marketing, we focus on retail, corporate, SME, and private banking, because you need to make a choice. But if you actually look at, let's say, the capability of our platform is much, much wider. And we have plenty of examples of banks. For example, we work with a large German bank that is in the business of real estate financing. Well, we don't have a real estate financing portal out of the box, but we have a lot of capabilities that they need. Actually, to be honest, on a project level, there is not an enormous difference, let's say, between a retail implementation or a real estate financing implementation, for example. So that I think that answers the question. But we are really in the banking industry. So any use case in banking, that is something we would like to be able to do.
I think this is also for Mambu. I believe, Alexei, it's fine if you just agree. Okay, let's continue. There's another question. There's an approach within your both solutions, so Mambu and Backbase, to monitor the alignment during the transition or migration of processes and treatments within both legacy and core systems. I think, Alexei, you already mentioned the kind of the trust topic, and therefore, and I think it's on both sides, correct?
I would say so. And it's also, I think, doing that on the technology level, either when you are building the distributed systems or if you are doing something sort of like reconciliations, that's obviously one part. But actually getting that alignment within the organization, I would say even more important. As I say, Frank was talking about the transformation, that it's first and foremost the organizational transformation, the way it actually approaches it, the way it can go, let's say, for the compromises, the way the organization can find the flexibility of migrating certain things. This is what differs, let's say, the successful transition from the non-successful one, because there's always a finite number, let's say, of the technical challenges that you're going to have. But the question is actually how you go through those challenges and how you can find those compromises.
Mm-hmm. I would go on. There's another question. How do you see Backbase place in the future of cloud service compared to on-premise solution, Frank? As far as here it is understood from presentation, most of the solutions delivered on-premise.
Yeah, and so the Backbase platform is cloud native, and also because of that, we are able to provide it as a service towards our clients. We can do on, let's say, on 3 levels. So one is the managed hosting we can take care of. We can also take care of the application lifecycle management. So let's say keeping up with the new releases and the new versions of Backbase. And thirdly, we can also, together with our partners, take care of, let's say, the ongoing innovation. But it depends on the bank's readiness to do so. And we see a big shift in the banking industry, but still, especially the large tier 1 banks, they let's say a year ago, they still preferred on-premise, but we see that it is now rapidly changing. Of course, there are always some exceptions, like countries like Switzerland and so forth. But our approach nowadays is always, let's say, Backbase as a service, unless. And there are always plenty of reasons why you have unless. But we see it rapidly changing, and I think in a couple of years, I think many of our new clients will be on some kind of Backbase as a service model, or they do it partly on their own in their own private cloud. But it basically, we are ready for it. They can just push the button and it's there, in theory, let's say. But it's the bank's readiness on their side, whether they're ready for it on their side.
Okay, thank you. And then the final question: how do you see the role of Backbase and Mambu in high-level product architecture? Which responsibility better fits Backbase and which Mambu? Which I think it's a good question as closing the session. I think we have mentioned it already. Clearly, Backbase is on top the client-facing layer, how I would call it, a consolidation platform, combining mobile, online, also the employees or relationship manager, however you call it, call center, all the different functions in one platform. And Mambu is definitely and clearly a core banking system. What you have probably seen, and that's something perhaps we can focus this question on, is the integration of both. I think you both have certain layers which you could even say where we even have a kind of an overlay there. But I think that's one of the advantages of getting such products together, and I think that's something you have already proven, that those both platforms work easily with each other, nonetheless, because of such integration layers, correct?
Yeah, so there is definitely to a certain extent an overlap, but we definitely also know what we are focusing on and what Mambu is focusing on. An overlap only becomes an issue if you have a monolith system, and both Mambu as well as Backbase are exactly the opposite of that. So that you can, in that actually allows you to pick and choose whatever fits best in your particular use case. And of course, in Greenfield, we have a preferred architecture that we basically present like this is how you should do it. But of course, if you talk about some more complex implementations or even migrations, then it's always a discussion with the team of Mambu. But there is a lot of knowledge about Mambu in Backbase, and there is also a lot of knowledge about Backbase in Mambu. So that is typically we go then hand in hand if we're talking together with a client, and we're shielding off the client if they want from all that type of complexity, so they can focus on their differentiator. unless they really would like to know, of course, then of course we open all the books and explain how the architecture looks like. But it's not an issue because the architecture is sophisticated on both sides.
Yeah, and maybe to add to that, even though, let's say, there may be some blocks on the diagrams that have same names talking about, let's say, the process management or the integration, it's usually different kind of processes and different kind of integration. For example, if you look at the origination that both me and Frank can mention, when Frank going to be talking about the integration, that's going to be about the journey that you have in your mobile, in your web application, in, let's say, your branch, and how it interacts, let's say, with, I don't know, making a photo of the document. When on the Mambu side, we're talking about, let's say, origination, and that process is quite often related to what kind of individual products you're going to create, how you're going to set it up. So it actually could be the two processes that are taking care of two different parts of the organization, origination process. Same way when it comes to integration, you need to build integration between the Mambu and the core systems, the general ledger and other group systems. And on the Backbase, you need to build the integrations with, I don't know, Experian or on Fido for the document scanning. So you have the requirements for the process management, for integrations, of course, in the both systems. But as Frank said, we have a very clear idea between our organizations where sort of those boundaries lie. And that's something we also try to really uncover in the first discussions with the customers and prospects.
Right, thank you. Now coming to an end. So Frank, Alexei, thanks a lot for your participation. Also, thanks a lot for all participants for their interest in today's webinar. I hope you have seen that it's possible to have a risk mitigating stepwise approach. And I hope you have seen and have understood that with the products we have presented today, it is possible to get this done. It's not just theory, it's definitely possible. And if you are interested in more details and to discuss with one of us or all of us these possible steps, please reach out to us. You will have here our contact details. We will share the presentation with all of you. We will also provide the recording of today's session. So if you would like to listen to it once again or share it with others, with your colleagues, please do so. And yeah, we are looking forward, and I believe we will continue these kind of topics, these kind of presentations. And if you have feedback or topics you would like to have for the next time, please let us know. We are always interested in these topics you like to hear more about, so that we can prepare this and provide you a next session as a webinar or even a physical presentation. Depends, of course, from the overall circumstances, but we are looking forward to this. So once again, Frank, Alexei, thanks a lot for your time, and hope to see you soon.
Thank you very much,
for
Phil.
hosting us today earlier.
And thanks all for attending, and see you next time. Thank you.
Thank you. Bye-bye.
Bye-bye.
Bye-bye.